Hi everyone, welcome to today's video. So today's video is very important. I'm going to do two things on today's video. First, I'm going to explain you the concept of PE re-rating. Very important concept for you to understand if you're a long-term investor in the stock market. Please understand this concept. Second, I'm going to explain 5 specific stock investing opportunities that according to me have undergone a PE re-rating very recently. So there are value buying opportunities in these 5 specific stocks. Please watch the video till the very end, understand all the logic, concepts, only then take positions in these stocks, otherwise you will start panicking. So watch the video till the very end and let's get the video started. Also, very quick note, please check the links in the description box. I have created a small case. I have also added some of my previous small cases. So you can go and check out these good small cases in case you are interested in investing directly through small cases. Let's get the video started. So let me help you understand the concept of PE re-rating by using an example, right? So the example is that back in 2020 when the COVID hit, everyone understood that, you know what, the tech stocks are going to skyrocket from this point because everyone is sitting at home, they have to use more internet, they have to watch more Netflix, they have to use more Zoom. So all the tech stocks started gaining a lot of momentum. So there was a PE re-rating of that entire tech industry. So all the tech stocks got a high valuation, whether you look at Infosys, whether you look at TCS, any tech stock that you picked, it got a re-rating of its PE. Now let me show that to you on the graph also. So we are taking a look at TCS's historic PE. So you can see that, hey, back in like 2018, 2019, up until the crash, right? Up until 20th Feb 2020, the PE of TCS was 24.5, approximately 24.5. So approximately 24, this is the range in which it moved. Then crash happened, and when the stock started recovering, there was an entire PE re-rating of this entire industry. Now it is moving at a PE range of approximately 35. So the entire tech industry underwent a PE re-rating due to COVID. Now using the same concept, the stocks can be rated downwards also, right? It's not as if that every time there is a new trend in the market, it is not as if the stocks will go up only and the PE will move in an upward direction. No, many a times the PE gets re-rated downwards as well, and due to which the stock price or the industry PE of that entire industry shrinks, and resultantly the stock prices also shrink. Now, in my understanding, currently there are 3 specific trends that are playing out that are re-rating different companies and different industries. Very important for you to listen to this section, because if you don't understand this section, you might enter in very high overinflated stocks and you will get stuck with it for years, right? So 3 specific trends that are happening. I've spoken about it on my previous videos also, but let me give you a very quick summary of these 3 very important trends in a very consolidated manner. So the 3 trends that are going on in the market is, number 1, high inflation. Right now you would have seen that Pakistan has undertaken a CPI, consumer price inflation, of 11.5% in November. That is very high inflation. I have been speaking on my channel for months now that we'll move towards a higher inflationary environment. And that has started to happen. That has started to happen even in India. Therefore, you saw a big down drop in stable stocks like HUL, Asian Paints also, because of this specific factor, because the entire world thinks that, hey, moving forward, high inflation is going to come and people are going to buy less expensive products. So because of which, premier companies like HUL, Asian Paints, etc., their margins will shrink. Is that going to happen? Is that not going to happen? I've explained it earlier. Do you think that companies like Asian Paints or it will suffer due to high inflation, or their business will grow? Let me know in the comment box. The second key trend that is happening in the market right now is the supply chain disruptions. Now what has happened due to COVID is that the supply chain in China got disrupted really badly. For example, China is one of the biggest producers of API, and they supply this active pharmaceutical ingredients to pharma companies all across the world. So that entire supply chain of APIs has taken a hit, a lot of compounds on it. Similarly, when it comes to rare earth metals, now China is again one of the biggest producers of rare earth metals. Some of the rare earth metals are only available in China. They have started consolidating and hoarding that now. In fact, the Chinese government is experimenting right now with the idea of consolidating all this rare earth material under one central umbrella, where they will decide whom to give this rare earth metal to versus not. So very important development. This is disrupting semiconductor industry and bunch of related industries with it. And what type of companies are getting hit due to this supply chain disruption? These are especially pharma companies right now, right? Especially that deal with APIs. So there is great buying opportunity from that perspective. And third and final trend is around tapering, because people have started believing that, you know what, stock markets have given up a massive run up from 2020 to 2021. This has been the golden phase, almost 100% returns on everything. Now it is just a matter of time that the markets have to fall. I do not completely dispel that notion. Therefore, I myself have been saying that please take entry in stocks that are not overvalued at this stage. So in simple terms, tapering means that excess liquidity from the market will be pulled away by increasing the interest rates. For example, the FD rates that you currently see, they might go up a little bit. Then rather than investing in stock markets, you are going to pull money out of the stock market and create an FD out of it. So that in simple terms is what tapering means in very, very rudimentary terms. And these trends are playing out. Now, how does this impact you and how you can use this information to make money? Let's talk about that. So I spoke about the Chinese supply chain disruption, and it is impacting API industry a lot. So due to which companies like Aarti Drugs have suffered a lot. If you take it from its peak, how much has the share price fallen? It has approximately fallen by 50%, 50, huge fall in a matter of couple of months itself. So the stock has corrected by approximately 50%. It's not as if that there was something fundamentally off with Aarti Drugs. So let us take a look that, hey, is this really a value buying opportunity? Let us take a look at financials of the company as well. So if you take a look at the performance of the company, the performance of the company has been good. They have been able to generate sales, no problem there, right? The sales have generally been going up. The profits are also going up. There is absolutely no problem there. So why is it that the Aarti Industries shares are going down? In simple terms, this is PE re-rating that is happening because of supply chain disruption from China. When COVID hit, everyone started believing the stories that, you know what, pharma is going to give the maximum return. Let's invest all our money in pharma companies. And due to which there was a massive run up for a company like Aarti Industries. Now what happened? That PE re-rating happened because we are not able to procure raw material from China. There was already overinflation that has happened in pharma stocks. The stock market is generally going down. Therefore, the stock has corrected. Stock has moved to a lower PE from that perspective. Very, very important consideration, because many a times we feel that, hey, you know what, because the stock has fallen by 50%, there must be something really, really bad with the stock. No, nothing like that. In fact, Aarti Drugs is a good stock. There is absolutely no problem with the company per se. It is just that it was overinflated during COVID. Correction happened in the market. Supply chain disruption happened. All these three factors combined, it has literally sunk the stock a lot, and therefore it has now become a value buying opportunity. On tomorrow's video, I'm going to cover more elaborately on this point about the pricing of the stock. So do watch that video very, very carefully. So let me speak about the second stock where I'm seeing a great value buying opportunity, and the stock's name is called as Hindustan Foods. Now, very quickly, let me just take you through the pricing levels first. So the stock has fallen from its recent peak by 27.5%, huge fall in the stock. Let us very quickly understand what is it that Hindustan Food does. If you want me to make a separate video on that, I'm happy doing it. I'll make a much more detailed video on Aarti Drugs and Hindustan Foods. But very, very quickly, let me help you understand the business model first. What it does is what Varun Beverages does. So Varun Beverages takes contracts for manufacturing liquids, right? So bottling plant of Pepsi, Coca-Cola, all that stuff. And it becomes like a back-end manufacturer for big companies. Similarly, Hindustan Foods become a back-end manufacturer for Hindustan Unilever's product, ITC's products, all that stuff. This in business terms is called as contract manufacturing. That Hindustan Foods will take a bulk contract from something like HUL for manufacturing 5 million bottles of shampoo. And then they will try to optimize their cost and bunch of different efficiencies to make money out of that contract. So this is contract play game. As India's demand for different products keep on going up, these companies like Hindustan Foods, Varun Beverages, they will continue to grow and scale new heights. Now, Hindustan Foods is a very good company if you actually understand the entire dynamics that has been playing out from 2017 onwards. The sales have skyrocketed. I have never seen sales like this for any other company, because a lot of contracts were given during COVID 2020 times, because many of the large scale manufacturers like HUL, they also own their own factories and operate their own factories. They could not manufacture a lot of material on their own. So they had to give contracts. Now these contracts are long-term contracts. So as per my understanding, this number is not going to come down dramatically, right? It is going to stabilize. And if that happens, it is a good play for something like Hindustan Foods. It is not going to lose a lot of value. So in my opinion, great company, available at a decent price point at 27% discount right now. So you can start taking a little bit of positions. Now I know many of you would drop off without watching the entire video. So let me put out the disclaimer also that please, this is not an investment advice. value buying is a very complex game. You need to understand the ins and out, because there is no guarantee that these stocks will not fall. Now, every time a stock falls by 5, 7, 8%, people start creating ruckus that, hey, Akshat, you recommended this stock, that stock, it has fallen by 5, 10%. Please do it as per your understanding. I'm just simply being transparent and telling you whatever I'm doing in the market. And honestly, stock market is not a place where you buy a stock today at 100 rupees and it will keep on going up like every single day by 5 rupees. No, it will show some drawdowns. Your stock might fall to 50 rupees, 40, 30 rupees also, and then it will shoot up, right? In one single day also, stocks go up by 20, 30% also. I see great opportunities in these companies. Therefore, I'm taking positions in it, and you can consider doing further due diligence on it. Now let's talk about the third stock, which I find to be a great value buy at this stage. And the company's name is Colgate-Palmolive. Now I've done a very recent video on this topic, so I'm not going to harp a lot on Colgate-Palmolive, but I wanted to show some quick key points on Colgate-Palmolive. So one, the stock price has fallen by approximately 23%. 23% on a big company like Colgate-Palmolive is a huge drawdown, right? That's point one. Point two, a lot of you commented on my last video on Colgate-Palmolive that, yeah, Akshat, the stock has not shown growth, stock has not done this, stock has not done that. I agree. I'm not trying to project the viewpoint that Colgate-Palmolive will beat Bajaj Finance in terms of growth. That is not what is happening here. This is value buying opportunity. You get to buy such stocks at almost 23-24% discount. And if they go back to their previous price, which is like the baseline price, you make like 30% profit on it. How much profit do you more want on something like Colgate-Palmolive, which is a sensible, stable stock? It has a huge market share in toothpaste, toothbrush, both. It has more than 50% market share in both these aspects. The product is stable. It's not as if that people will stop using toothpaste or toothbrush. Its sales are stable. So let me show you sales chart also. For example, if you take a look at sales, then in 2018, the sales were 4188, in 2019, 4462, 2020, stable sales, right? It has not gone up, it has not come down. But let us look at the stock prices. In 2019, the stock was trading at almost 1580. Right now, it is trading at 1450, right? So you are getting this stock almost at previous 2 years valuation. So from that perspective, you need to do a cost benefit analysis, risk analysis, and then enter such stocks. So my assessment on this is very simple, that it will at least go back to its previous price level, which is around 1600-1700 levels, and this should not take more than another 8 to 10 months if the market is okay. And in 10 months, if you make 30% profit on this, then what is wrong with it, right? So let me know in the comment box what you feel about this stock. Now the next stock that I'm going to talk about is Hathway Cables. Now this is a Reliance owned operated company. And if you take a look at the pricing chart, the stock has fallen by approximately 51% in the last 14 months itself. Now, why is it that Hathway Cables is going down? Because the entire telecom industry is going through a churn, that's one. Second, this is a growth play for Reliance. They are going to combine this company with TV Network 18 and bunch of other digital businesses that Reliance has. So I see that, hey, this stock is available at a great price point right now, almost at 50% off. Is it generating enough sales? Let me do that analysis. So you can take a look at the recent numbers from 2018. So Reliance acquired it in 2019. So from 2019 onwards, the sales have been on an up move, right? It's not as if that this is a bad company at all. Is it growing profitably? Yes, it has started to grow profitably. Therefore, I feel that this stock has left a lot of upward potential rather than a downside potential. So the stock is not going to fall much, but it is going to go up from this point. That is my analysis. And this is further validated by the fact that since the time Reliance has actually taken ownership of this company, you can see that this company has turned profitable, right? Before this was always a negative profit making company. Now it has turned profitable. This is a great sign. And the business re-rating has also happened. How? Because when Reliance decided to invest in this company, the stock price became a rocket, right? Everyone started buying it. Similar to what is happening on Tata Motors, right? That, hey, because a private equity firm has decided to invest in Tata Motors, everyone believes that, you know what, Tata Motors, next big thing. So everyone has started buying it. Let it come down, then you buy, right? So that's my simple analysis here also, that PE re-rating has started to happen for Hathway Cables. And now would be a great time to enter such stocks because they might still fall by 5-10%, right? That's not a problem. But when they come up, they can come up a lot because they have shown a previous peak which is much higher than its current valuations. Now, just to calm your nerves, let me also show you the shareholding pattern of this, right? So you can see that this is where Reliance took ownership of this company. Now, as per SEBI's mandate, they had to sell their share to bring their shareholding down to 75%, right? So you can see If we go on promoters, this is Jio, held by Jio. They have not cut down their holding further once they reach that 75% mark of shareholding, right? FIIs have increased their shareholdings and DIIs have generally decreased their shareholding by a little bit. So this is a solid company in my opinion. There is absolutely nothing wrong, especially from a value buying perspective. Now comes the final stock. I have talked about it a lot and I'll keep on talking about this stock because this is my favorite stock. Now my favorite stock is HDFC AMC, and if you take a look from its peak, from its recent peak, because stock has corrected by 33% for an HDFC company. Now the obvious question would be that, okay, why has the stock corrected by 33%? Must be something wrong with the stock. No, it is a simple PE re-rating that is taking place. Why PE re-rating? Because when the run-up happened in COVID 2020, finance stocks moved a lot, right? For example, Bajaj Finance, it was before 2020, it was moving at around 5,000, 4,500, 5,000 levels. Now it is trading at 7,500 levels. So huge jump from pre-COVID level to post-COVID levels. So because of the fact that tapering will happen now, and this is going to impact finance and banking stocks and AMC stocks first, therefore this entire panic is there in the AMC industry right now. That's one. Second, the margins for AMC business is going down. There is absolutely nothing wrong with it. Let me explain why. Because AMCs are launching more and more products. For example, right now, a lot of new products are being offered by AMCs where Indians get to invest outside India. Should you do it? I'll make a separate video on that. In my opinion, you should, by the way, because it gives you diversification advantage. Now, new products are being offered. The industry is still in a very nascent growth, and it's a rock solid industry in the sense that people are going to continue to invest in mutual funds. They cannot do away with that. You cannot forever keep your money in FDs. Whatever money will be pulled out because of that, interest rates will become high. So let's pull out money, put it in an FD. Till what point you are going to do it? You will still have to bring it into the market, and majority of us go via the mutual fund route. Therefore, AMC business is a solid business. In my opinion, this might be the final major correction that will happen in the AMC business. Post this, it will see a major boom for the next 2-3 years. So this is what I'm betting, and this is the reason why I am very bullish on these 5 stocks that I talked about. Do check the links in the description box about other stocks that I have recommended in the past and learn more about it. Very important note before I let you go. Number 1, please be careful in terms of buying these value stocks. They are available at great price, but this is not a buying recommendation that you just literally go sell your house and invest all your money in it. Please don't do that. Okay. Please take little positions. That is the second key point that you need to keep in mind. Third and finally, continue to learn about these industries, continue to monitor these stocks, and whenever the opportunity presents itself to buy more, do it. Keep some money in spare, right? It should not happen that you have invested all your money in these stocks and now you are out of money and you have no more money to downward average it in case the market falls. Why? Because if the market falls in entirety, the entire Nifty corrects by let's say 1,000 more points or 2,000 more points, these stocks will also come down, right? It's not as if that these stocks will be spared from that perspective. But right now is a great buying level for these stocks. You can start entering it because we don't know whether the market will surely correct or not. Major correction that had to happen on these 5 stocks, in my opinion, that has already happened and I am taking positions in it. Thank you so much for watching this video and I will see you the next time.